What is the must hedge at this point? We've had this run up 24% in the S&P 500, pretty much hovering around a new high.
So we think you should be a little bit cautious with regard to technology, and we're very encouraged that the reactions to last night's earnings in the tech space have been positive. But we think there's a little bit of nuance here. If you go back to the January reporting quarter, you had positive reactions in stocks that have been beaten down, and then they kept moving higher. But you've already had a really, really large run. And the message of this morning is that at the broader index level, it's going to be really hard to make progress if it's going to be tech alone. We think tech is overbought here.
Overbought, and yet you would have thought Microsoft looked like it was set up to be maybe disappointed selling the news, and it seems like it's adding to it. I mean, market willing to double down. Tech plus what used to be included in tech, right? Like Alphabet, like Facebook, like Netflix, which are now communication services, must be a third of the market right now.
It's the percentage is gaining, and it's one of those circumstances where, you certainly paid the price at the end of last year. People are jumping back in, and you've seen these stocks. They're up 20, 30, 40% or more. It's probably time. We're not saying sell them. Yeah. We're saying that, particularly if you're looking at a 3-month bias or so, that there's likely to be a pause.
Now, if tech is that big a driver of the upside, and you're seeing maybe it should pause or pull back a little bit, the overall market, where does it leave it? Because you still do think that there's upside to your target.
We do, but again, you've run a very long way, up really 25% or more off the bottom in December, and things don't move in a straight line. So our view is that the next several weeks are likely to be a pause, digestion. We're still in this mode where a lot of things have to go right for the market to move further. And frankly, the geopolitical things, Brexit and China, have yet to go right conclusively.
Will the Fed continue to be something that continues to go right if the economy grows, let's say, more than 2% in the first quarter, and that's the low?
Well, I think the message of the earnings this morning and the messages we're getting out of Europe is that this economic recovery has yet to take full flight in the rest of the world. So from our point of view, particularly given the dollar strength of recent days, we think the Fed continues dovish. We actually think that they are on course to cut rates later this year, and we think that that's going to be borne out.
So you think the fact that the dollar is strengthening against other currencies is itself a governor on what the Fed might do?
It is an engraved invitation to cut rates, because essentially, if you go back to last year when there was turmoil in the markets, a lot of it was due to dollar strength putting pressure on the rest of the world. And it's very clear, China has stabilized, no question about that. But that stability has yet to bleed into Europe, and you've still got political dislocation there.